from my experience with signals and a lot of trading questions this week, from my experience with signals to switch pairs like Tesla and TSLAQ, and now with pair trading on steroids, I know there's a risk with big movements in the wrong direction. Isn't it advised to have stop losses set for this? So yes. So first of all, regarding stop losses, you guys know I don't like to use stop losses in crypto because it's so manipulated and there's such violent swings up and down. You're going to get wiped out and you'll be out of your position. Therefore, if you are in a position, you got to watch the markets. Okay. And now, if you don't have time to watch the markets, you can look at things like the 4-hour chart, and you can pick Pico bottoms and Pico tops that way. So you can check in once every 4 hours, once or twice a day, and find out what's going on. But with this one, yes, let's talk about stop losses for 1 second. They can be triggered by short-term fluctuations in price, especially volatile markets. They can fluctuate wildly. Like I've noticed, what typically happens with Tesla is it'll open strong, it'll weaken off during the day, and it'll rise towards the close of the market. Very, very important. So you have to be careful with how you place them. Also, they can be triggered by market manipulation. Market makers can fish for stop losses if they see big ones. But as a retail investor, you're probably not going to trigger that. But also, they can be used to create false market signals. And market participants sometimes use stop losses to do this. They place a large number of stop losses below a certain price level in order to make it appear like there's a lot of selling pressure at that level. And this can scare other investors into selling. So remember, there's a lot of psychology there as to where you see things, buy walls, sell walls. Remember, it can also be manipulated as we go forward. So let's talk about stop loss on pair trading on steroids. So here, typically, this is the most important thing. We went through a very historical run for Tesla over the last 11 trading days. It has basically gone up straight in a row. But the key here is you sometimes see on pair trading on steroids a sell signal. There's little red triangles all the way up on dips. But the reason this product comes with what we call optimized trend is to keep you in the trade. You follow the trend. So for example, if you're long, you stay in the trade while it's blue. You only get out if that trend turns to orange, then you get out. And of course, the model below is below. But you can see in the green piece at the bottom, it's just always up, 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 firing sell signals because it's unprecedented behavior. Only once before in the history of Tesla has it gone up for so many straight days. And I think it's at a joint record right now. So if it goes up tomorrow, it'll be a new record. Now, let's look at another tool you can use as well to identify where to place stop losses for equities. And here, this is the layer out model, which is designed for really profit taking, but also setting stop losses and also identifying layers at which to layer in at. And what's interesting about the position of this right now, and this is a dynamic model, we drop the anchor where the price crosses the 200-day moving average. And you can see here, you'd probably place a stop loss at 237. And then a lot of people asking, in fact, there was a couple of questions as well. I want to buy more Tesla. Where do I buy? So you'd have like a big buy order in, let's say 201, but there's a good chance we may not get that low. But maybe layer in at 237, get a little bit, but it could fall below. And just depending on how you configure this, that is also an important tool. But if you are long and you want to lock in your profits, you'd have that stop loss at 237 right now. Or what I like to do is go right under the big number. So it'd be 236.9 would be where I'd place it. So I hope that helps. One last thing. I always say this and people don't understand what I mean. But I call it don't jump in front of a freight train because you can't stop the train. When there is a huge amount of momentum, that's why I call it a freight train, because it has all the oil behind it. You're there. You're not going to be able to stop this thing. So you want to stay on the train. Don't try get out of such a trade with such strong momentum, as signified here by the big blue trend as well. So again, that's what I mean when I say that. The trend is your friend. Don't fight the trend as you go forward. And Tesla, I do believe, should be valued at $400. The problem is Wall Street is so full of these amazing analysts. They think it's going to $30. They think it should be valued like a Toyota or a General Motors. because they don't understand what it is. But the penny is dropping for these people. Slowly but surely, they begin to see all the colliding S-curves, the dominance, the checkmate moves of things like supercharging, and the world is waking up. But again, I think it's a $400 stock, so if you have patience for the next, say, 12 to 18 months, it will be back at 400, and I'm 90% certain of that.